cut in half. So there's going to be a tightening of supply in May of 2020 next year. At the same time, demand has been rising, in part, as you mentioned, because of the interest in Facebook's stablecoin and how that may onboard digital currency users. And also China. Fears of China's trade concern have been driving up demand in China. We're seeing onshore premium for Bitcoin in China that's fueling the price increase there as well.
So you mentioned Facebook, which is a relatively new development and obviously a huge one for the industry. But Facebook isn't a cryptocurrency. What they've announced isn't a cryptocurrency per se. Libra is a stable coin, and that it's backed by, in theory, fiat currencies. How does that alter the landscape for the more traditional cryptocurrencies here, like Bitcoin and Ethereum?
Right, so there's some debate about whether Libra is in fact a cryptocurrency. Some would argue that it is, others argue it isn't. What's key is that it's not as decentralized, it's not as trust minimized as a cryptocurrency like Bitcoin, meaning it's run by a corporation, a set of corporations with a limited number of computers operating it. There's been a fear that some cryptocurrencies could be negatively impacted because of the competition with Libra, but not Bitcoin. It's very different. It's scarcer. It offers something very different than what Facebook's putting forward.
Garrick, worth pointing out, you're also head of research at blockchain, so this is very much in your wheelhouse. Let me try and understand this a little better, and hopefully you can do that for me. A stable coin is underpinned by existing financial infrastructure. What's to stop a trader trying to attack a stable coin and try and unhook it from the peg that it's automatically attached to?
Right, so we've seen that happen. Tether, the most well-known stablecoin, has been around for years. Sometimes trades, a bit off its one-to-one peg. We've seen it drop to 89 cents, but arbitrageurs will come in and actually, convert Tether for real U.S. dollars to kind of bring the peg back in line. And that certainly should be what people can do with Libra as well. So that's one way that the prices of stablecoins have remained relatively stable.
And I know you don't have a huge amount to go on. It's a 12-page white paper. You've had a few public comments when it comes to Libra. But if this is a product aimed at the unbanked, as Facebook seem to imply it is there a long-term problem with the fact that it's not going to offer an interest rate return like a normal bank would? They're not trying to offer banking services. But if you're someone in a part of the world where you can't act as a bank, are you going to take this even though you might lose value against inflation?
Right, so that's there's a lot of unanswered questions. We've seen stablecoins actually earning interest rates through various providers. This is what's called decentralized finance, where you can earn 6% right now on some stablecoins by making them available for lending purposes to traders and others using them. So just because Facebook isn't directly paying out interest to Libra users doesn't mean other providers may not offer interest.
Hi, I'm Joanna Bersecci, and thank you for watching.